So we're now looking towards McEwen Inc. and next to me is the chief owner, Rob McEwen. Welcome.
Good dag.
Could you begin by telling us a little bit about McEwen Inc.?
Sure. We're listed on the Toronto and New York Stock Exchange, symbol MUX. We have operations through the Americas, an underground gold mine in northern Canada, an open pit gold mine in Nevada, an open pit mine on care and maintenance, but we'll be reactivating in Mexico in the Sinaloa state. An underground mine, a joint venture in southern Argentina, it's gold, silver, and we have a very large copper project in Argentina as well.
And here at Nordic Funds and Mines, what has been your sort of perspective so far?
This is my first day. It's well organized. We have a long list of meetings, which is good. Generally going pretty well.
Let's talk about the company then, McEwen Inc. Gold and silver, which metal is currently the majority of your revenue?
Gold, by far. By far. It'd probably be 80% gold.
And as in terms of exposure towards the spot price, is it also gold there?
Gold and also copper. We have a project that's about 35 billion pounds of copper. So, and we have two global partners. We have Stellantis and Rio Tinto as shareholders, as well as McEwen.
So in Argentina, your San Jose joint venture, Los Azules, you released a feasibility study just today. Can you share with us the highlights?
It's a great moment to get this feasibility finally out. Yes. So you're looking at a mine that would be, if it were in production today, the 26th largest copper mine in the world. It would be running, we're looking at 20 years with another 30 years, so 50 years life at a minimum. There are a number of exploration targets around it that suggest it could be even longer life. We'll have to explore to prove that up, but it would be in the second quartile of cost, so relatively low cost. You'd be looking at producing, if you want to do the math, 450 million pounds of copper a year for the first 5 years, and at $1.71 a pound. So that would give you a 65% gross margin. So if you did the math, copper is 480 right now. You'd be about 2.2 billion in revenue, and you'd have a gross profit of 1.4 billion a year. So large. It also, I wanted to design a mine that was very environmentally sensitive. So we're going to be using a lot less water, a quarter of the water of a comparable size mine. We'll be using a quarter of the electricity. We'll be emitting 1/10 the carbon because we're looking at using all renewable energy in an electric fleet. And we wanted to create a jewel on the landscape rather than a scar.
Is there any negative angles to going that route?
Yes. By going on a heap leach process rather than a concentrator, you reduce the recovery rate of the copper, and you can't pick up any byproducts, which would be gold and silver. We are looking at a process that at the end of 21 years, we put another process in there that would allow us to increase the recovery of copper, gold, and silver.
And in considering looking at McEwen from a whole, you explained that gold, you're most exposed to that metal, but following these feasibility study in Los Azules, and when that produces, will copper become more important?
Very much so. Yes.
I see. In your goals, you've explained that you have today 130,000 GEO, which you will attempt to increase to 225 to 255,000 GEO, and this in the span of 5 years, if I'm not mistaken. Can you tell us more about that goal and what sort of milestones you need to have in place to achieve it?
Absolutely. The GEO stands for gold equivalent ounce, so it would be taking copper and converting it to, or silver, and converting it to a gold equivalent. So that growth is organic. We will generate sufficient funds from our operations to pay for that. We are looking at expanding beyond that, and a property we recently bought. But we'll have a pre-feasibility study out in the first quarter of next year. This quarter we'll have an update on our resources of both our Timmins assets and our Nevada assets. So there'll be a new resource number on both of those. What else do we need? That's about it. Well, permitting as well.
Of course.
The permitting could slow you down if it doesn't come in the time we hope it does.
And looking at your geographies, there are quite many. What is the strategy behind that?
Well, part of it was just as a result of some companies we merged together, that they had properties in South America and other properties in North and America and Mexico. So there was cash flow on one, and I thought that could finance some of the development of the other properties. And I controlled 20 or 25% of both companies, so I put them together, and that's how we ended up with the assets spread through the Americas.
I see. And for investors who want to know more about McEwen Inc., where should they look to and what should they look for?
Oh, well, I mean, investors are looking for a gain. So we have management had put together two values, a low value and a high value, based on the current market prices. We can see a value of $22 a share or $67 a share. So a 22% increase to get to the low and a 3.8x to get to the high. As I said, in the current environment, I think we're going to see much higher gold prices in the near future. But they could go, if they want to look at the stock, they just look up MUX or go to our website, McEwen Mining or McEwen Inc. We changed our name from mining to Inc. to give us more latitude in operations. And they'll have all the information they need. They'll even look at the feasibility study that we just put out for our copper project, which is a small book.
Thank you very much, Rob McEwen.
You're welcome. Pleasure.